Hi and welcome to Weekly Market Update. It is Tuesday the 30th of July 2013. It's been a very quiet start of the week for the markets, and we've got a big few days at the end of the week with our central bank meetings. We've got the US Fed on Wednesday, ECB and Bank of England meetings on Thursday, and also Friday brings the non-farm payroll numbers. So people are sort of holding off at the start of this week. We've seen the main action coming from day traders. Volumes have been very light, so the moves that we have been seeing, just day traders sort of trading the ranges of the day. In terms of data that we've seen for the start of the week, yesterday morning we had Italian sentiment surveys, those improving slightly. From the UK we had credit data and also M4 money supply. Month on month this hadn't changed, but on year we actually saw quite a large increase in the M4 money supply for the UK. Also we had CBR reported sales for UK, which came in at 17 from a prior reading of 1, so a really good increase in the CBI sales there for the UK. Otherwise from the US we had pending home sales, and when we saw a slight fall in those. In terms of data that's come out this morning, overnight we saw Japan industrial production data that actually came in weaker than expected. However, we saw also an unemployment rate for Japan, and that actually improved, went down to 3.9% for unemployment. So sort of a bit of a mixed picture out of Japan overnight. Depending whether you look at the weakening industrial production or the improving unemployment data, wasn't really sure how to take this session, but Asia had largely had a positive session. From Europe this morning, and we've seen German consumer confidence that coming in a slight improvement, touching to 7. We also saw CPI data from Germany, and that also slightly improving as well, just a slight uptick for the German CPI data. From Europe, we've also had confidence surveys, and those improving as well. Otherwise from Europe, we saw Spanish GDP numbers staying negative, but better pictures. But as I said, still in a contractionary territory for the Spanish GDP. So for the rest of where that leaves us sort of trading today, we've got the FTSE around the 65-68 mark. We've got the Dow future at 15,509, Euro dollar 1 spot 32.85, cable around the 1 spot 53.12. For commodities, we see gold future at around 13.23. We've got the crude around 107 spot 15. But as I said, volume's been very light today, and trading light, so largely range bound, looking for some bigger moves and more directional trading throughout the latter part of the week. For this afternoon, we've got the European Commission publishing a financial statement for the Eurosystem as a whole, and then from the US we've got Case-Shiller house price index data, as well as a consumer confidence survey from the US, which we're actually expecting to tick down to 81 from 81.4, so not a dramatic fall, but we did see on Friday a really positive University of Michigan confidence reading that came in much stronger than expected, so it'll be interesting to see what confidence we see from the US this week. Okay, so looking ahead to Wednesday, this is where we start to see quite a lot of data coming out, lots of bits and pieces of data from across Europe and the UK, and also a few bits from the US, but I think it's largely going to be overshadowed by these big central bank meetings that we've got for the rest of the week, and also the US unemployment data. But Wednesday morning starts off with UK consumer confidence survey overnight, expecting that to improve slightly. From Europe, we've got German retail sales, expecting a slight fall in those, and also German unemployment rate, expecting that no change there to stay at 6.8%. Otherwise from Europe, we've got CPI data. We'll get readings from Spain and also Italy, and then the Eurozone as a whole expected to stay largely the same as the last reading, so nothing too different there from Europe. From the US, the more minor data, we've got mortgage applications. Reading was down 1.2% last, and we've also got PCE data, and we sort of get personal spending and personal income data for the US throughout the week, but starting with some PCE data on Wednesday. But the bigger figures from the US is going to be the ADP employment change number. This is ahead of the non-farm reading that we're going to see on Friday, and people largely use this to gauge what we might see from non-farm and maybe might alter their expectations. We're expecting a reading of around 180,000, slight fall from the last reading. But also from the US, we've got their Q2 GDP reading, expecting that to come in around the 1% mark. So people will be largely watching that. And it's also worth noting from the US we're seeing GDP revision data, actually revisions going back to 1929. Usually we see revision data for the past couple of years, but this is actually taking quite a large extended period, and so we may see that affect the data that we see coming out, so it's worth bearing in mind. On the big focus for Wednesday is going to be on the conclusion of the Fed meeting, which is on Wednesday evening, concludes with this statement and the decisions from the Fed on what they'll be doing in terms of their QE and also their rates. We're not expecting any change in the rates or the QE, but we are expecting, or people are largely expecting, a change in the language that the Fed is using, and possibly a change in the benchmarks that the Fed have set. Currently, one of the key points is this 6.5% that they've set for when they could hike rates, 6.5% unemployment rate. We're looking at they may lower that rate because they want to make sure and ensure that we've got a really true healthy picture of unemployment for the US before they start altering rates. And we don't want them undoing any of the improvements that we've seen in the US economy. So we may see a lower of that threshold, just so that people don't get too carried away with this 6.5% and then expect a rate hike. But before we even start talking about rate hikes, we've obviously got to start to see the tapering and stopping of the QE. People still largely expecting that for September, throughout the end of the year and then into next year. Again, looking for any language which may alter what we expect from the Fed and when we see this QE start to taper off. Okay, so then into Thursday, from China overnight we've got PMI manufacturing reading, expecting that to fall to 49.8. It's been above that 50 key mark for a long time, so for it to expectation of 49.8 is quite significant, and we've seen some weakness in China recently, so to fall to 49.8% for their manufacturing, one of their key sectors, would not be too good a sign for China. Otherwise, for Europe, we've also got their PMI manufacturing numbers, and actually expecting the improvement to continue there. We've seen just slightly ticking up, nothing too drastic, but the numbers are slowly getting better, and expecting to continue that theme throughout this week. And we've also got UK PMI manufacturing as well, and expecting an improvement there to 52.8 from 52.5. As I said, then lunchtime brings the Bank of England meeting, probably one of the main focus of the day alongside the ECB. From the Bank of England, we saw a surprise statement released last month. No action from the Bank of England. And none further expected. However, we may be looking for a statement. They introduced the language of forward guidance last time and said that they would be pursuing forward guidance. So this month we're looking for maybe them to flesh that out a bit further, maybe give us some guidelines, some benchmarks in what we can watch out for and what we could be expecting to see from the Bank of England. Some people have said that maybe we won't see this, the fleshing out of the forward guidance and the language until next week when we get the Bank of England inflation report, when Carney may present a few more of his ideas at that next week, which is August the 7th, that's released. So it largely depends what we see Thursday, and then we may see more action Thursday, but they may hold off a little bit until the week after and the inflation report. Obviously post Bank of England we've got that ECB meeting. Again, not expecting any action from the ECB, not expecting any rate cuts or changes there. What will be watched is the press conference following with Draghi. The journalists are going to be trying to pull out some more answers from Draghi, try to put numbers, benchmarks on what we can expect to see from the ECB. They obviously began forward guidance or undertook forward guidance at the last meeting, but we're largely expecting the language to remain the same, that rates will remain at present or lower levels for an extended period. We'll try and get some clarity on that, but I doubt the journalists will be very successful, and Draghi will try to keep his language very loose and very open. Thursday afternoon from the US, we've got initial jobless and continuing claims, expecting those to tick up slightly, but nothing too drastic in terms of change. Obviously, this is sandwiched between the ADP number and also the non-farm number, so probably not as closely watched as other weeks, but definitely something to look out for on Thursday. We also get the US market PMI final reading, which we're expecting at 53.2, and then we get consumer spending data in the afternoon, another theme for the week for the US, alongside ISM manufacturing, which is expected to tick up to 52 from 50.9. Okay, so finally into Friday, we've got UK house price data overnight. Not expecting too much change month on month, a slight uptick, but year on year expecting quite a significant improvement to 3.1% for the house prices in the UK. We've also got PMI construction data from the UK, and again expecting an improvement there to 51.5 from 51. From Europe, we've got PPI data, so producer price inflation data, and expecting that to tick up slightly, and also that LTRO repayment that we get every week, expecting probably around the 1 to 2 billion as the combined total for the 3-year loans as a payback. It's sort of been slowly decreasing week on week, and you're largely expecting that 1 to 2 billion mark for both. But the big number Friday is going to be that US non-farm payroll number. We've seen it consistently been hanging around the 200,000 mark, which is the mark that we need to maintain in order to see a true improvement in the US unemployment picture. So the expectation is around 185, but hopefully pushing up towards 200,000 for that. We'll also get average earnings alongside that in the unemployment rate, which we could possibly, some people are seeing an expectation of that to tick down. So you're looking for some really positive data from the US, but it's worth noting that we will get personal income, personal spending data alongside that, and it's important to look at the picture as a whole to see exactly how healthy things are looking in the US. But following that, just the afternoon, a few extra bits of data from the US. We've got ISM New York, and we've also got factory orders, and expecting an improvement there to 2.3 from 2.1. Okay, so that's it in terms of data. Obviously, the big events of the week are going to be the Bank of England meeting, the ECB meeting, and then the non-farm numbers on Friday. So that's the themes of the week. But okay, as usual, any feedback is much appreciated. Thanks very much.